It has been a crazy market. So Tesla reported profits that dropped 50%, stock price went up. Meta announced profits that went up over 100%, stock price went down. But all that's not important. What's important is if you listen to both their earnings call, they both shared a hidden stock tip. Those of you who have been following the recent reports of companies announcing earnings may be scratching your head a bit because, for example, yesterday Meta announced pretty good earnings. To give you an idea, their revenue was up 27% year on year to $36.5 billion, beating by $200 million. Their earnings per share was up 114% year on year to $4.71 and beating by 39 cents estimations. Daily active people, more people are using WhatsApp, Instagram, and Messenger. 3.2 billion people in the world use their products, up 7%. Ad impressions up 20%. And of course, with now TikTok being banned by Congress, we should expect a lot more business to come to Meta. So great news, right? But the stock price dropped more than 15% after the announcement after hours. And when the market opens today, the price may open at $420 or maybe go down to all the way to $400. In fact, I'm hoping it's going to happen, and I'll tell you why more later on. Now, on the other hand, Tesla announced results about a week ago, and they were worse than expected. Revenue dropped 9%. Earnings per share dropped 53%, and they both were below expectations. Earnings missed by 11%, revenue missed by 4%. And what happened to the stock price? It went up over 20% initially, but of course now it's coming back down. But it's still up 12% since the earnings were announced. So people who are new to the markets will be very confused, like what's going on? So the thing I keep reminding people is that, remember, in the short term, the stock market is not always logical. The market can be totally irrational in the short term because in the short term, market prices are driven by emotions, by news, and by manipulation. So in the case of Meta, sure, they announced very good earnings, but Mark Zuckerberg came out and talked about something the market didn't like. He said we may increase our investments and our capex, and people went, oh my God! The stock price crashed 18%, right? Whereas Musk came out, and although the earnings were not very good, he said, but well, we're going to have new cars coming out, affordable cars by the end of this year. Next year, market say, whoa, and the price went up. So when the market acts irrationally and emotionally and doesn't make sense to most people in the short term, is that good or bad for investors? And the answer is that if you understand the fundamentals of the businesses that you own or you want to buy, and you understand the real intrinsic value, short-term mispricing and irrationality is great news. So for example, let's look at Meta, right? Meta announced great earnings, and I may revise up my intrinsic value based on the better than expected free cash flow and revenue. But for now, I've not adjusted my valuation. So my valuation remains the same at the intrinsic value of $480 per share. So I mentioned a few days ago in my previous video that I wanted to buy more Meta, right? But I couldn't buy it because it was freaking overpriced. And I said, oh my God, if they announce good earnings, it could go up even more. I can't buy it again. Damn it, right? So now good news. They announced good earnings, but the price went down. That's the best gift that Mr. Market can give investors. And those of you who have been following me would recall that I made the stupid mistake a couple of months ago of selling half my Meta shares at about $400 because I sold covered calls. Yeah, dumb idiot me, right? And the covered calls basically were assigned, and half my shares were taken away, so I lost half my shares at about $400. And I was really upset because I only had half my shares left to go up. But now the market's coming back down, hopefully back to 400 or below 400, so I can buy my shares back, right? So fantastic news. And by the way, my average price for Meta is actually $169, right? Now, Meta went all the way down to $70 in 2022. Of course, I couldn't buy all at the bottom, right? So I was like averaging up, averaging down. But my average price is $169, okay? So again, like I said, I sold half at about 400, and hopefully it drops back to 400 or below, I can buy it back, right? Because long run, Meta is definitely going to keep increasing in terms of its intrinsic value. So right now my valuation is 480. It'll keep growing to 500, 600, 1,000, 2,000. It just keeps growing, right? Now again, that's not the most important thing. The most important thing that I like to talk about is that if you listen to the earnings call of Tesla, Meta, by the way, I always encourage investors, you got to listen to the earnings calls, and if you don't like to listen, read the transcript. Now, in the Meta earnings call, Mark Zuckerberg said that they aim to build the world's leading AI models and services, and this leads me to believe that we should invest significantly more money over the coming years. So when the market heard that, they go, oh my God, he's going to spend more money, oh, we're going to die, and the stock price crashed, right? Okay? And he says we're going to build even more advanced models and the largest scale AI services in the world. And then he went on to saying, yep, we're scaling our capex and energy expenses for AI. And of course, the market didn't like it. Market thinks short term. They don't like the company to spend money, even though it will lead to even higher revenue and profits in the future. So the market went down, right? And then he said, I also expect to see a multi-year investment cycle before we fully scale Meta AI. Business AIs, and more into the profitable services I expect as well. Now remember that one company's expenses is another company's revenue. So as Meta is aiming to spend more on AI infrastructure to build up their AI capabilities, which will be the main beneficiary company? The answer is NVIDIA, that's right. So if you don't know already, the majority of Meta's GPUs required to run their AI are NVIDIA chips. Now let's look at Tesla's earnings call. This is by Elon Musk. He said, we also continue to expand our AI training capacity in Q1, more than doubling our training compute sequentially. And then he went on to say that right now we have just installed and commissioned 35,000 H100 computer GPUs. Now H100 are NVIDIA GPUs. And he said over here, but roughly 35,000 are active, but we expect that to be probably 85,000 or thereabouts by the end of the year, and just for training, right? So in other words, what he's saying is that Tesla is going to spend a lot more money buying NVIDIA GPUs. So again, one company's expense is another company's revenue. So if you read between the lines, Mark Zuckerberg and Elon Musk and probably a lot of other CEOs in their conference calls are alluding to the fact that NVIDIA is going to have another blowout revenue and profit report in the next coming quarters. Now, having said that, again, does it mean that NVIDIA's share price will jump in their next earnings report? Let's hope not. Let's hope it crashes. Because again, remember that in the short term, the market may not be logical. NVIDIA could announce great earnings, great revenues, but the stock could drop 20-30%. And I hope it's going to happen because I want to buy more shares of NVIDIA. And I can't because right now it's overpriced. I can't buy more. Damn it. Okay, so please drop, right? Yeah, so currently my intrinsic value for NVIDIA, I did share this previously, is about $709. And right now it's at $796, so it's slightly overpriced. Sure, I could buy a bit more right now, but I prefer to buy it when it's more undervalued to give me a bigger margin of safety. So earnings are coming up on the 22nd of May, so we've got about a month to go. So fingers crossed, let's see if NVIDIA could drop for emotional reasons, and if it could go below $700 to $670, $630 or $570, I would be eternally grateful. Jensen, please make that happen. Say some stupid shit. You know, all these stocks that we're talking about, whether it's Meta or Tesla, NVIDIA, AMD, these are stocks that are very exciting to people. And there's a lot of cult following because these are stocks that are changing the world, if you will. And again, we're going to have different opinions. Some of you, again, will be very bullish on Tesla. You think Tesla's a great company that will change the world. And, I'll have a different opinion. I'll think that, Meta, I prefer to invest in Meta and NVIDIA. So we all have different opinions, and that's really fine. But at the same time, I'm here to tell you that as an investor, it's important to have a well-diversified portfolio. Sure, we want to have companies that change the world that can, 5x and 10x and are very innovative. But remember that ultimately, what is the main objective of investing? The main objective is not to be right, that the company I pick is better than your company, or that my company changes the world. That's not the most important thing. The most important thing is to make sure that 5, 10, 15 years from now, your net worth is significantly higher than where it is today. That you're able to build your wealth in a way that beats inflation, that outperforms the index, and so at the end of the day, you have enough to be financially free and financially secure, out of the rat race. And you want to do it in a way that is as predictable, as low risk, and as stress-free as possible. Would you agree? All right. And a lot of people, they come to me and they ask me, Adam, what are the best stocks I can invest in that can give me very good returns, but with the lowest risk, that are very stable, that are very predictable, that are really, really great companies, right? And I'm here to tell you that over the years, what I realized is that sometimes the best investments, the best companies are the ones that are not changing the world, are not the ones that are innovating all the time. The best companies to invest in for the most part of your portfolio are boring companies. Boring companies are companies that we use products and services that are not very innovative. They are very mundane. So for example, waste management companies, funeral services, auto parts suppliers, swimming pool equipment. It's bloody boring, these companies. They don't change the world, right? But they make the best investments. Why? In fact, Warren Buffett said many, many years ago that he loves to invest in boring businesses. Why? Because boring companies are very predictable. And when a business is very predictable, its revenue, its profits, and free cash flow is very, very consistent. So you don't get a lot of volatility. You get basically the stock price just going up very nicely over the long run. And boring companies, they don't attract a lot of new competition because their industry is so boring. You don't have a lot of new players wanting to come in to innovate, right? So because of that, you get a very, very defensive, stable kind of business to invest in. And those of you who are subscribed to my UIP, you're my students for many, many years, you know that about half my portfolio are into very boring companies. And these are the companies that actually ensure that my portfolio is very predictable. So no matter what happens, I know that my wealth will keep growing, growing, growing with all these boring companies. And let me give you a few examples right here. So now, by the way, some of these stocks, I already own them for quite a long time, and some of them I've not bought them yet because they are not cheap enough. But I'll just share what I mean by boring companies, all right? Now, one of the companies that I have owned for a while, which is very boring, okay, is AutoZone. And AutoZone is the largest retailer of aftermarket auto parts. So if you own a car and you want to fix your own car, you want to buy auto parts to fix your own car, tires and batteries and carburetors and all that. Yeah, AutoZone is the number one retailer in auto parts in the United States. And again, it's a very boring business, right? But take a look at their numbers. Look at that. The revenue growing consistently for the last 15 years. So even in a pandemic, even in a recession, even in a market crash, they make more sales every year. Look at that. And the revenue is also growing, the net profit growing consistently, the free cash flow growing consistently. So I've owned this for quite a while. Another one of the stocks that I own for a while is another very boring company. They are the biggest supplier of swimming pools in the world. Right? They sell swimming pools, all right? And 60% of their revenue is not new pool construction, it is pool maintenance. So once you buy a pool, you have to maintain the pool with chlorine and chemicals and cleaning equipment. They sell all that stuff. It's bloody boring, but it's a damn good business. Why is it a damn good business? Again, check it out. Their revenue grows consistently, all right? And they had a big jump during COVID when people wanted to build pools in their house because they want to spend more time at home. And again, their profits and free cash flow also growing very, very consistently. Throw in another example, which would be MSCI. You don't think about MSCI, they're the biggest manager of indexes in the world. So you've heard of the S&P 500 index. You've heard of the Dow Jones index. These are indexes. Now, the biggest provider of indexes is MSCI. So you may have heard of the MSCI World Index, the MSCI Emerging Markets Index. So half their revenue comes from getting fees from ETFs that use their indexes as a benchmark. In fact, I think if I'm not wrong, about 1.4 trillion worth of ETFs in the market use MSCI as the benchmark. So they earn fees from all these ETFs. So every time you buy an ETF, chances are some fees are going to MSCI. And they also provide financial analytical data for investment houses and banks to do investment research. So it's a very boring business. But again, take a look. Their revenue, their profits, and their free cash flow goes up every single year. It's recession-proof, it's pandemic-proof, it's a bloody boring company, but it's so predictable. These are the companies you want to own. So boring, there's no new competition, the price always goes up. In the long run, revenue keeps growing, right? And of course, we all know Costco. Costco is a very boring business, but my God, right? It's a great business. Now, let me just show you how these boring companies have performed against the S&P 500. So if you take a look at the S&P 500 ETF over the last 10 years, it's up 231%, right? But how about all these boring companies? People think that only innovative companies like Tesla and Meta, Nvidia, they beat the market. No, these boring companies, they do very well, right? So let's put in the first boring company, Waste Management, right? They manage waste, your shit, okay? And if you look at the last 10 years, they have grown 500%, clearing waste, all right? That's almost double the S&P 500, okay? How about AutoZone, the one I own? And AutoZone, again, they sell all these auto parts, carburetors, batteries, and tires, boring, bloody business, up 500% as well, doubling the S&P 500, right? Swimming pools, Pool, the other stock which I own for quite a while right now, check it out, Pool's up 650%. Selling swimming pools, very boring, right? How about MSCI, which I talked about earlier on? MSCI up, 1,000% versus the S&P 200%, outperforming the S&P by 5 times. A bloody boring company. Let's throw in one last one. Costco. You guys know Costco, right? By the way, I don't own Costco because it was too expensive to buy. But I would own it if it gets cheap enough. Hopefully one day I may buy Costco. And Costco's up 700% as well. And again, these are just a few examples. So again, in my portfolio, I've got, again, about half my stocks into these boring ass companies that do very well, that beat the market 2, 3, 5 times, and no one talks about it. No one argues about it. Everyone argues about Tesla versus Meta versus Nvidia, AMD. Everyone argues about it. Let them argue. I make my money in boring shit. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.